Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn Associates with your metals market update for this Wednesday, the 12th of July, 2017, and we're getting on to 2:30 p.m. Central Daylight Time. So today was Fed Chairman Yellen's day to speak, and in her speak, what she basically said is that the Fed is getting closer to neutral, where interest rates should be. Didn't sound to me like a lot of rate hikes coming down the road based on the current data set. The Fed is going to look and still is going to continue looking at shrinking its balance sheet beginning this year. She lied when she said she doesn't even think about the fact that what the president's going to do with either appointing her or somebody else shortly as the next Fed chairman. How could you not think about that? So let's understand that part. I give her all the credit. I think she's brilliant, but you got to think about it. You can't get away from not thinking about it. What are you going to do next? Was this her last meeting today in front of the House? Tomorrow it's in front of the Senate again, though, and when she goes in front of the Senate, we'll probably get another series of questions that we should pay attention to. But what the market took from it is, I think, how I'm explaining it. The Fed's not set on just keeping its pedal to the metal for raising these interest rates. She said she thinks there's one more this year, but she also said there's great concern and they are looking at inflation, or rather the lack of it, and with employment running this hot, is it sustainable? That's another question that they're wondering about. And you're not getting wage growth out of even this. She also mentioned the middle class. There it's the job sector that seems to be getting hurt without that wage pressure. It's the low-end jobs, it's the higher-end jobs where the hiring is going on, not that middle of the road. So the stock market took what she said apparently as a bullish note. Look at how much it's up. Yes, the Dow made a new intraday all-time high. The dollar, a small bounce. The euro and the other currencies got hit more than anything else, and the yen's up a little bit today. I wish I could answer all the reasons why, but I can't. We then saw the EIA numbers come out with another big drop in oil stocks, and that picked the market up, but it's unable to hold a big rally. Now, late in the day, we got word that next week there's going to be an emergency OPEC meeting. They just called a new date. I write about it in my report. What I think's going on is you've got OPEC members, including Saudi Arabia, overproducing for the month of June. Qatar just signed an agreement yesterday on terrorist funding with the United States, a way to look into it. Now, if they're accused of terrorist funding, and they're one of the ones looking at it, what does that do to the group that's against them? Saudi Arabia, UAE, Bahrain, and Egypt. Interesting what's going on. It's a way to try to, if you will, placate everybody. So when we look at the gold, we're getting a bounce. I'm still going to point out on the weekly chart that the 18-week moving average of closes, this red line's 1250, 150, and if you rally, that might be a target it goes to, but it's got a problem there in that that's a resistance point. The first thing you want to get over is this right here. While it's an area chart of just closes, that was the last closing high. You have not been able to take it out yet. The pattern is clear. You've got lower closing highs and lower lows on the closes. So you're in a downtrend. When you come and you just look at a regular chart here, hard to get away from the slope of the chart has been all the way down. You'd have to get over the 1230 level in order to negate that pattern, and that number is exactly, when you put the swing line on it, 1229.50. So the pattern right now is still one of lower highs and lower lows. Prices are under the 18-day average. If you were to take out 1229.50, the first resistance point in the market is 1236.20. However, it would break this pattern of lower highs and lower lows and formally take you out of that bear trend, but the bias would be down until you closed under 1236.30, or 20 rather in this case. And next resistance level, amazingly, is the 100-day average, which is tying in on the weekly chart to the 18-week moving average of closes. When you come over to the Bollinger Bands, you've been riding the lower band and you're getting a bounce away from it. We've done that before. Now the question is it got enough of a bounce to get over 1229.50? The fact that the Fed is not talking of keeping the pedal to the metal on raising interest rate, raising, gave the gold a little bit of a respite today. It doesn't mean that it's got to compete necessarily with some of these interest rates that keep going higher. When we take a look at this, and to me, I'm all focused on the slow stochastic reading, you lost the bearishness. Now, when you lose the bearishness, the only time you can get it back is the next business day. If it doesn't do it quickly tomorrow, the odds favor then that price and the 18-day average are going to make a run at each other. In the gold ETF, if you take a look, you're trying to lose it right now. Now, there's still time in the trading of the stock market, but at this hour, you're losing the embedded reading, and just like the futures, if it loses it, I'm looking for price and the 18-day average to come together. And when you, on this market, had your move up and over these key numbers and turn the momentum up, you went right to that 18-day average. You're out of your downtrend in GDX, but you're not in an uptrend. You're in a nothing market at this exact price. When I come to the gold-silver ratio, as I told you, when the market got up here, it was looking to me via slow stochastic studies in silver, as I watched them being lost, that silver would gain back on gold. The lower this number drops, that's exactly what's occurring. And as you come to the silver, you lost your embedded reading back. Let's get to it right here. This was yesterday. And you can see that when you lose it, the word is, do you make that run to the 18-day average? Typically you do. Not always, typically. Let's see if that's the case right here. In the copper market, it continues on with still stocks of, the vote in different companies for strikes taking place in the world. Grossberg's still not producing. I don't think you can go by the LME stocks. I'm questioning just what's going on there. As they put large amounts in, they take them out. I'm not sure that there's a story to be had there. In the chart action, you had a lower low and a higher high, and that's not a trend. Momentum-wise, you're sort of flat here. The bias is up because you're over the 18-day average, but if you were asked, is it a clean chart, I would say, nah, it's a hard one to figure out. In the palladium market, this is platinum, right. If you'll notice, you had what? You had an embedded reading. Got those numbers? There you had your 3 days in a row under 20, both numbers. And watch this. You lose it, and it happens to be in the same day you lost it. You went to the 18-day average. Normally, it's not all in one day. And notice where the market sort of stuck, right against that particular number. When we come to the palladium market, you were just oversold. You lost that. You've still got a pattern of a lower low and a higher high. Not a trend. The bias is clearly up because you're over the 18-day average, and momentum is pointing up. If the market can run, you might be going back to the upper Bollinger Band. If it slips from here, look for it to play around that 18-day average of closes as it searches for direction. In the dollar index, you're in an oversold condition. That's the first thing. You have a market in a downtrend on the swing line, and the bias is down. So this market either gets ready to embed with both of these numbers getting under 20 for several days in a row, or you're going to get a correction in the market to the upside. So those are the things I'm looking at right now. You know, when you saw the numbers today come out of the EIA, they justified the API numbers yesterday, which were bullish, but OPEC is finding itself in a very difficult spot. And that spot is that if you look at production numbers for June, even Saudi Arabia is overproducing, Nigeria, Iraq, Iran. I write about it in tonight's market report. I've already written that part about it. So they're calling a meeting that's for next week. They've moved the meeting way up, a special meeting of OPEC. This isn't just a committee to talk to Nigeria and Libya. They're going to have to do something about production, cheating. What is that something going to be? And the market was up $1 higher, and after they announced it, you slipped back $1. I don't quite know what's going on there. We'll have to figure that one out over time. I want to remind you about one of my favorite publications that's a $79 a year value free from us. Go on their website, you pay it for it. But with us, you're going to get it for free. And it's a whole new look to this magazine. It's Modern Trader. You're an FX trader. They cover it. Options trader. They cover it. Stocks. Individual plays. This one deals with the rails. Goes all through there. Chart patterns galore. And then daily stories, because the magazine comes out once a month. You get that through Market Focus. How do you get it? It's all by email. Call us. Go to our website to sign up. Click right here if you're watching me on YouTube. You'll see an icon that'll bring you to our forum. Or underneath us, it says on many websites, click here for Ira's free offers. Do so, and you'll be able to get to that forum right away. I'm Ira Epstein. Thanks for watching, and I will see you all later in the day or tomorrow. Take care.